Yo, what's up, guys? New stream, new title, StonksMaxxing. It's day one of StonksMaxxing, but in reality, I just changed the title today, so I might have to update the days as they go by and readjust them. But right now, I want to take a look at VF's recent quarterly earnings. I think I tried doing that in the previous quarter, in the previous stream. I'm also eating some hot Cheetos right now, but I never got around to doing that. And I think the 10Qs were released yesterday. So I think what I want to do then is I'm going to probably go into Morningstar, get the graph data real quick, and then take a look at some of the new metrics. Let's UMD Morningstar. Business, let's take a look. I also got some Pepsi too. Let's take a look. VF Corp. What's up today? All right, nice. Uncertainty is very high. I'm surprised that it has a narrow moat according to Morningstar. Yeah. Let's take a look at his financials. You really can't see anything right now. But I think total revenue, business revenue. Oh, this might be standardized data. All right, let's take a look. And then let's also take a look at the quarterly data here. And also, is there financial report.xlx? Here we go. I see. All right. So let's read through this a little bit super quickly. Let's skim through it. It seems like they've had a pretty bad quarter. Revenues were down across the board in terms of the four biggest brands. So yeah, VF, North Face, Vans, North Face, Timberland, and Dickies. I think some catalyst behind revenue declines in North Face is going to be the actual warm weather, or they say it could be warm weather. So that's a bad sign of global warming and the risk that poses to outdoor wear apparel brands. Let's take a look at the balance sheet. And they also did note that they were able to reduce their inventory. Seems like by a few $1 million. reduce their inventory down to I guess that's around 150 million, which is pretty decent. Total current assets, property, plant, equipment. So I'm going to compare this with I'm going to compare this with this income quarterly statement. Delete. All right. Let's zoom in a little bit. Okay, so total revenue. Let's also use separate this by commas. Can we now get the comma currency? There you go. Okay. Total revenue 2.9. Cash revenues. All right. Let's take a look at this. So inventory is declined, accounts receivable is declined. Probably due to the low revenues and maybe conversion of receivables to cash. So current assets declined. All right. And you have plant, property, equipment, intangible assets. No big impairments there. Goodwill impairment of about 200 million. Operating lease worth of use. Not too sure what this is. Let's take a look. Some use assets. I think this is actually a pretty good question for GPT. So, what is operating rights? Operating lease rights of use assets. Okay, what are, I guess that's what the right. This is so crazy. Okay. It even tells you the actual like statutes. Transparency and comparability among organizations by recognizing lease assets and liabilities. Okay, operating leases were not reported on the balance sheet. So off balance sheet financing. These represents the lease's right to use an underlying asset for a lease term, okay? When a company enters into an operating lease. It must recognize a right of use asset. It must recognize a right of use asset which reflects the benefit the company will receive from the use of the lease liability over the term. Arising from the lease. Balance sheet recognition. Okay, the right of use asset is typically amortized over over the lease term, while the liability is reduced as lease payments are made. So I'm assuming that probably comes up with the amortization expense. In lease and interest on the lease liability over the lease term. This differs from the previous approach where operating leases were recognized as a single lease expense on a straight line basis over the term of the lease. Right, picture financial. So, what is an operating lease? Let's start with the basics here. What is a lease? The transfer of ownership rights. Let's turn to a lesser. Taking the risk. The lesser. What is a lease? Operating leases are beneficial for businesses that need flexibility and want to avoid the risk of maintenance. For one party, the lessor grants another party, the leasee, the right to use an asset for a specified period in exchange for consideration, typically regular payments. Okay. Okay, so I think then when VF reports the operating lease right of use assets, this is how much or the value of the assets that VF Corp is leasing and maybe the benefits that those provide. Okay. Other assets, I guess they'll probably explain a little bit about there. So short-term borrowings, current portion, and long-term debt. I think there is a... Yeah, so there is a commercial paper maturing this year. I think maybe in April. March or April. To double check on that. But that is, I think, hopefully being funded by the sale of the PAX business. So right now we can see that there is a portion of long-term debt that is due this quarter or this year, and there's not that much cash that VF has in order to pay off the debts. But VF could also refinance the debt. I think what they're trying to do right now is to deleverage their balance sheet. So I believe in the conference call they had, they really focused on making sure that they're not refinancing and adding more leverage onto the balance sheet. So I think that's what the case is going to be, and especially because I think this debt that's maturing, could be wrong. Okay, so I thought it was a commercial paper or some type of senior notes. Doesn't seem like it. Maybe it's part of the revolving credit facility, but I think the interest rate might be a little bit higher if it were to refinance compared to the cost of the interest when the debt was actually issued. So not 100% sure about this one. Maybe they'll talk about it later. Accounts payable increase. So maybe that's interesting. So accounts payable increase even though inventories decreased. Maybe they sold more, but I don't think that's the case. Well, actually, their revenues compared to, let's see what their revenues are. Yeah, I guess they're comparing year over year, not quarter over quarter. Oh, you know what? I do have the quarterly numbers on this spreadsheet, so let's take a look here on what is going on. Okay, delete. Wow, so even revenues declined on a quarter over quarter basis. Q2 2024, that's interesting. So just looking here, we can see that cost of goods sold decrease, probably due to the decrease in net revenues. I don't know what the percentage is. I think the gross margins actually increased this quarter. And we have selling general administrative expenses decreased a little bit. Impairments of goodwill and tangible. Okay. The impairment of goodwill and tangible assets. You know, I see this happen like every year or so. They do have some type of impairment, and it seems like it's a regular charge that happens. And I think Damodoran, when we're trying to forecast future cash flows, he suggests that if there is a common charge, usually that occurs on a regular basis, we can just take the average of that. I don't know how I feel. Let's see what this impairment charge is. So total cost and operating expenses, operating income loss, interest income, interest expense. Okay, interest expense actually increased compared to last year. Okay, I think they did end up issuing more debt this year. Excuse me. Okay, so there is a loss this quarter. I feel like on the books, yeah, there is a loss, but I think in terms of cash flow, it should still be positive. Income tax expense, so they are getting some tax benefit, I guess, from the impairment, which is nice. Okay, so we have a loss of 11 cents per share. Seems like there's a little bit of dilution here with, I guess, some conversion of options into stock. Okay, net income, comprehensive income. Oh, I see. Okay. So there's also losses arising during the period, so income tax effect. So I'm not, what's this here? Foreign currency translation other, lost 4,000, 25,000. Well, they actually have a pension, so they have a defined benefit pension. Current period actuarial gains, losses, so they did lose some money, unfortunately. And amortization of nets, deferred actuarial losses. Not too sure what this is. Amortization, settlement charges. Okay, income tax effect. And losses during the period. Okay. So I think this is the big one here, the loss in derivatives, derivative transactions. It seems like the company has historically not had a great derivative history, although could be wrong. This is positive, this is negative past 9 months. Okay. Tax effect, other comprehensive losses, so 82,000. Net income loss. Right, so this is a non-cash expense. Yeah, so free cash flow, or at least operating cash flow, is still pretty good. Software purchase, financing, increase in short-term borrowings. Okay. Yeah, I guess free cash flow is still pretty good, actually, in terms, right? Even though earnings might be kind of disappointing. On a cash basis, VF seems to be pretty strong. This is 9 months, ended December 2022. Do they not report the 9 months? Oh yeah, do they just do 9 months? Let me see, cause VFC 10Q. Do they also do 9 months here, or are they 6 months into September? Six months into September. Wait. Oh, right here. $550 adjustments, appreciation. Okay, so they were able to, all right, get rid of their accounts receivable, so they're able to receive money. Accounts payable, accrued income taxes, accrued liabilities, operating rights, lease, right of use, capital expenditures, software purchases, other net, contingent consideration payments, net increase in short-term borrowing. Okay, there's nothing there. Payments on long-term debts, rights. I think some debt matured last quarter. Cash dividends paid. Okay, change in cash equivalents. End of period. Beginning of year. 73. So this is cash over the past 9 months, and most of it was used to pay down debt, it seems like. So the actual cash balance only increased by 170 million. Okay, stockholders' equity. So we have shares common amounts. What does this mean? Yeah. Net income loss, retained earnings, accumulated deficits. So total. This might be the par value of the shares. I don't know. Additional paid in capital. Dividends on common stock, 90 cents per share. Stock-based compensation. So subtracted this many shares. Took out this many shares nets. Form base. Alright, this actually, I'm not too sure how to read this statement of stockholders' equity. So I'm going to skip over for that now. I'm going to come back to it. Basis of presentation. So fiscal year. March 30th, 2024. Presentation purposes herein, all references to periods. Okay. Accompanying unaudited. Similarly, the March 2023 consolidated balance sheet data was derived from audited financial statements, but does not include all disclosures required by GAAP. In the opinion of management, the accompanying unaudited interim consolidated financial statements contain all normal and reoccurring adjustments necessary to fairly state non-recurring adjustments necessary to fix. Okay, so on October 30th, 2023, VF introduced Reinvent. So this is their overall business strategy, the transformation program to enhance focus on brand building and to improve operating performance and allow VF to achieve its full potential. The first announced steps in the transformation cover the following priorities: improve North America results, deliver the advanced turnaround, reduce costs, strengthen balance sheet. Refer to Note 18 for additional information. Okay. Okay, so it's something about the different accounting standards. Let's take a look. Issued accounting standard ASU number. Form facilitation of the effects of reference rate of form or financial reporting. Reference rate of form scope. Okay. The guidance provides optional expedients and exceptions for applying GAAP to contracts, hedging relationships, and other transactions affected by reference rate reform if certain criteria are met. The guidance is provided to ease the potential burden of accounting for a reference rate reform. I guess this refers to maybe some of the underlying fixed income securities that VF holds, or maybe swaps or different derivatives that depend on some type of reference rate. Let's take a look. During the first quarter of fiscal 2024, the company amended the terms of its $2.25 billion senior unsecured revolving line of credit, which replaced the LIBOR benchmark interest with a benchmark interest based on the forward-looking secured overnight financing rate. Okay, the first quarter of fiscal 2024, but did not impact VF's consolidated financial statements. Okay, so I think first one, I believe the actual interest rate, this refers to the interest rate charged on VF's global credit facility, and this pretty much just says that instead of using the LIBOR, I think the London Bank overnight rate, London Interbank overnight rates, they used a secured overnight financing rate. So there's a change in the actual benchmark rate that the short-term borrowing interest is charged on. And then let's take a look at this one. So the Federal Accounting Standards Board, liability supplier finance programs, disclosure of supplier finance program obligations. Companies with supplier finance programs to disclose sufficient qualitative and quantitative information about the program to allow user financial statements and the nature of activity and became effective for VF in the first quarter of fiscal 2024. So the roll forward information that would be effective. Early adoption is permitted. The company adopted the required guidance in the first quarter of fiscal 2024 is evaluating the impact adopting the guidance related to the roll forward information. Okay, so I think the supply chain financing program refers to some retailers, manufacturers. They allow some of the participants in their supply chain to pay back, or I think it's VF will pay for the materials before the product is actually even made for the supplier themselves. That sounded kind of weird, but let's move on from that. Okay. Improvements reports, which updates reportable segment disclosures requirements primarily through enhanced disclosure about significant segment expenses that are readily provided to individual groups. Guidance requires disclosure of the total position of that and how it reports on segment profit or loss are used to assess performance of allocators. For annual disclosure beginning in fiscal 2025, and expanded requirements include all annual disclosures about reportable segment profit or loss and assets in subsequent interim periods. Early adoption is permitted. The guidance requires retrospective application to all prior periods presented in the financial statements. The company is evaluating the impact that adopted. Okay, this is interesting. So, provable to reportable segment disclosures. That's something to maybe keep an eye out. I guess this gives more transparency to each of these business segments, not only just for VF, but maybe all companies that are publicly traded. Income taxes, which is intended to enhance transparency and decision usefulness of income tax disclosure. Additional income tax information primarily related to the rate reconciliation income tax paid. The rate reconciliation disclosure requires specific categories, additional information for reconciling items that meets a quantitative threshold. By individual jurisdictions that are greater than 5% of total income taxes paid. Effective for annual disclosures beginning in 2026. Early adoption is permitted. The amendments are required to be applied on a prospective basis. Okay, so I think there's just some changes in the way that VF might have to report its segments in the future, income taxes, also the way it discloses its supply chain financing program, and also just the switch from LIBOR to SOFR. I'm not too sure what it's called. But let's take a look. So contract assets and liabilities. Yeah, what are these? Included in the other current assets line item, included in the accrued liabilities line item in the consolidated balance sheets. For the 3 and 9 months ended December 2023, the company recognized $59.9 million and $187.1 million, respectively, of revenue that was included in the contract liability balance during the periods, including amounts recorded as a contract liability and subsequently recognized. I guess these are probably deferred revenues, actually. A revenue that was included in the contract liability balance during the periods, including amounts recorded as a contract liability and subsequently recognized as revenue as performance obligations are satisfied within the same period, such as order deposits from customers. Change in the contract asset and contract liability balances primarily result from different times. $84.6 million fixed considerations related to the future minimum guarantees and effect on its licensing agreements. Expects such amounts to be recognized over time based. Okay. The variable consideration related to licensing is not disclosed as a remaining performance obligation as it qualifies for sale-based royalty exemption. VF has also elected the practical expedient to not disclose the transaction price allocated to remaining performance obligations for contracts with an original expected duration of 1 year or less. Revenues by channel geography, which provide a meaningful depiction of how nature, timing, and certainty of revenues are affected by this factor. Okay, so let's take a look. So I want to ask, what are contract assets and liabilities? Performance obligation, but is not yet entitled payment according to the terms of the contract. Progress in long term or revenue is recognized over time, but the customer is billed at specific milestones. Accounts receivable, what kinds of invoice content, or the company has a right to conditional payments before the company transfer the goods. This is commonly referred to as deferred revenue. Okay. Company or with contract assets reflect the company's right and obligations under its contracts with customers and are crucial for understanding the company's revenue recognition practices. The recognition is part of. Okay. I feel like it's reasonable. So deferred revenues and assets, the way they're an asset is because company, in this case VF, has maybe paid or offered goods to a client or customer for this amount, and it won't be able to record revenue yet because it hasn't met a specific milestone. I think that's the big takeaway here. Alright, so this is the geographic revenues. Okay. Europe, Asia Pacific, wholesale revenues, 3 months ended December 2023. 9 months ended December 2023. Inventories, finished product, work in process, tangible assets. Okay, yeah. I think what I'm gonna do here is probably actually I'm going to just quit this for now. Visual Studio Code. Oh man, can I not track this up? Okay, I guess I can. Alright, I'll drag this up then. Oh wait. Oh, can I not drag this one up either? Yeah, I don't think I can. Oh man, and just realized that the live stream, it's not actually streaming my... okay. This is frustrating. Yeah, it was never looking at this screen this whole time. You gotta be kidding me. Okay, here we go. Okay, nice. I think it's actually, okay, it's actually showing up now. And, oh, there we go. Okay, so let's see here. I think I might know why I couldn't do that earlier. It's because the Excel is on full screen. Okay, that makes sense. Let's take a look at Zhang Fund company reports, VFC. Okay. Let's take a look at data.txt. So geographic revenues. 2020. Let's say, okay. Yeah, am I gonna have to compare? Yeah, I think I might compare, let's say Q1, so this is Q3, 2023, Q3, Americas was 1573.769. that's not right. Okay. What's the best way to... Yeah, what is the best way to get this data? Am I gonna have to manually put in everything all at once? Maybe I could do it in a Excel spreadsheet actually, and then export everything as... It's probably my best bet because I was just doing everything in a text file. I feel like the text file probably isn't the best idea. So let's do a new Excel file. And okay. All right, let's do this. So we have outdoor, active, and work total. So wholesale, right? DTC royalty. Geographic, Americas, Europe, Asia, Pacific. Okay, so this is where we had 973.292 401.521 198 956 157 769. So now outdoor is actually more. 428. Okay, 850. Oh, right, there's another dimension of time, which is there a way to multi-index this by time? I don't know. Eight 50167 63773 1937368. So royalty was 6325 6994 6211, and this was 19530. So let's just make sure we have everything correct. Which equals sum okay, I feel like there's probably something wrong here. 7. Okay, Americas. They have 1110 134 766 394 217 408. All right. Some 643 740 312 857 26752 work. Okay. 24780 179 431 and 249171. Yeah, so it seems like even though this is probably a small fraction of supreme revenue in Asia Pacific, so okay. Total 9 months. So more outdoor than active, actually. Wow. Wholesale. So direct to consumer is doing okay in the 9 months. It seems like even though wholesale is down substantially in the... Okay, so revenues are down in the wholesale departments of... Yeah, across the board actually. Direct consumer spending is also declined as well, except for in the at the outdoor space. So does that mean a weakening demand for first wholesale and then direct to consumer? So consumers are wanting to buy less directly from VF, and also retailers are not looking to buy VF goods as much anymore either. So that's a double not good. Finished products, work in process, raw materials, total inventories. $3.5, 10.4, based on the carrying amounts of amortizable asset, intangible assets and above. Estimated amortization expense for the next 5 years beginning in fiscal 2024 is 13.7, 13.1, 12.2, 11.7, 10.8 million respectively. Okay. Weighted average amortization period, accelerated net carrying amount. So what is the net carrying amount? What is the net carrying amount of amortization? Nice and equal. Oh, I see. Cost of asset, initial value. Okay. So cost, accumulated amortization minus net carrying amount. Customer relationships and other indefinite net carrying amount. So there hasn't been any accumulated amortization there. Impairment charges. We have performed interim impairment analysis of the Timberland and Dickies reporting units and recorded impairment charges of 195.3 respectively, reporting as part of the outdoor segment. Okay. Accumulated impairment charges for the outdoor segment was, as of December, 518 and 323 million respectively. Accumulated impairment charge for active segment was 394.1 million as of December 2023. 1.8 million for the work segment as of December 2023. Accumulated 61.8. So that was the first time it seems like there was an impairment in the work segment. Leases, operating lease costs, other lease costs, total lease costs. Okay. Retail locations, office space, distribution facilities, machinery, equipment, and vehicles. Substantial majority of leases are operating leases. Rail costs, finance lease costs, short-term lease. Rental lease costs were as follows: 321 and 315.0 million for operating leases, respectively, during the 9 months ended December. Okay. Right. VF commenced a Euro commercial paper program, which, in addition to its existing U.S. commercial is supported by VF's $2.25 billion global credit facility. The company designates its U.S. commercial paper borrowing as a net investment hedge of VF's investment in certain foreign operations. $89, $50 million in aggregate principal outstanding. Okay. VF facilitates a voluntary supply chain finance program that enables a significant proportion of our suppliers of inventory leverage VF's credit rating to receive payment from participating financial institutions prior to the payment dates specified in terms between VF and the supplier. Okay. So that's both the suppliers and financial institutions. VF is not a party to the agreements. There's no economic interest in supplier decisions. Okay, so they can sell receivables with VF. Okay. Pension costs, common stock. Oh wow, yeah. Portable segments, segment revenues, outdoor. Wait, this is not the case. Is this 6 months? 3 months? So 3 months, channel revenues, outdoor. But in this case, this was $1 million. Oh, shoot. Okay, so this might have been 2022's. Yeah, that was. Okay. I see. Yeah, okay. I used the wrong year when I was inputting them. So, alright. Just making sure. Yeah, that seems about right. 268940 outdoor 7 total profits. Outdoor active is a loss. So legal settlement gains. Legal settlement gains. Okay. Work. Other. Wow. Okay. So revenues were better in 2022, definitely compared to 2023. I think this also had to do with the Timberland tax case, so it's not fully terrible. Level 1. So this is the impairment analysis, hedging activities, restructuring. So recent developments. Okay, this could be interesting. Triple B. So data, which could result in including but not limited to litigation or regulatory results of operations. Okay, put that. Sales of equity. Severance plan, interesting. Okay, wait, let me see what's going on here. Wait a minute. Let me see. Oh, here we go. Okay, nice. It's still going, it's still going, it's still going. Okay. So I think I want to read about their updates on reInvent and this data breach that they had. Okay. Recent developments. Detected unauthorized occurrences on a portion of its information technology system. Excuse me. Upon detecting the unauthorized occurrences, VF began taking steps to contain, assess, and remediate incident, including beginning an investigation, leading external cybersecurity experts, activating its incident response plan, and shutting down some systems. As a result of these and other measures, VF's investigation and remediation efforts remain ongoing. VF believes the threat actor was ejected from VF's IT systems on December 15, 2023. The threat actor disrupted VF's business operations by encrypting some IT systems and stole data from VF, including personal data. After VF shut down some of its systems, VF experienced a disruption to certain of its operations, including interrupted replenishment of retail store inventory and delayed order fulfillment, which had impacts such as the cancellation by customers and consumers of some product orders, reduced demand on certain of its brand e-commerce sites, and delay of some wholesale shipments. While VF is still experiencing minor residual impacts from the cyber incident, VF has resumed retail store inventory replenishment and product order fulfillment. It's caught up on fulfilling orders. Okay. The material impact of, or reasonably likely material impact of VF limited to one business hours discussed above, which are no longer ongoing at the time. Material, no, not to be materials. Be seeking reimbursement costs, expenses, unless it's stemming from VF's cybersecurity insurers, timing, and amounts. Oh wow, there's cybersecurity insurance. That's interesting. Okay. Interesting. Okay. Transformation program to enhance focus on brand building and to improve operating performance and allow VF to achieve its full potential. Steps in transformation which cover the following priorities: global commercial organization, inclusive platform model on the company's operations in the Europe and Asia Pacific. Has created the role of Chief Commercial Officer with responsibility for go-to-market execution globally. And President's focus on direct consequence and intent of the ongoing model change, which is particularly critical at this stage for the Vans brand. Most brand presidents to direct greater focus and attention to long-term brand building, product innovations, and growth strategies. To lead transitions leader and the product teams doing the work. Ongoing with VFCO surveying the role on an interim basis. Improve operating efficiency and profitability. Retention, spend in non-strategic areas of business. Third quarter of fiscal 2024 were $50.7.9 million. Okay. Which primarily included costs associated with severance and employee-related benefits and certain non-cash. Okay. Subject to approval by its board of directors. 9 cents. $3 billion compared to the 3 months ended. 13% decline. Decreased 21%. Wow. Increased 17%. Decreased 30% in the current period, including 1% favorable impact from currency. Basis points, so that's 0.2% compared to the 3 months. Partially offset by unfavorable foreign currency impacts. COVID-19. Okay. Interesting. So, VF's operations in China, I guess Asia and Pacific, are doing pretty well. compared to operations in America, and I guess that's where the company is really trying to focus on its growth. Okay, I'm gonna go use the bathroom real quick and also dry my clothes from the laundry, so I'll be back in a sec. So take a look at my text messages, I will be back. put my stuff back into the dryer. Go into the bathroom real quick. God damn. I'm back. Let's see, it's 6:51. So another 9 minutes. And I think I'll call it for right now. Go shower because I just came back from skateboarding. Alright, let's. Increase 30 basis points. Reinvent charges. Okay, so big things, I think. I'm gonna write this down in QMD. Call this reinvent. All right. So looking at the reinvents. Okay. Q3 updates. VFC's VF had a abysmal fourth quarter. Dudes. Third quarter in fiscal 2024. So this is, I believe, October to December 2023. Revenues declined for all 4 segments. So it seems like the revenue decline is already built into the price. VFC stock. Yeah, it surprisingly went up too. This. So VFC then asset sell off. Some assets, million. Okay. This could be interesting to watch actually later. All right. So yeah, where does VFC go from here? Even with this bad quarter, I mean, is that really going to affect the long-term outlook of VF and how it can recover and turn around as a company? And it's difficult to say what would be the catalyst. So catalyst for growth in the next 5, 10, 15 years. Okay, so I think the big one that they mentioned in the call was new Vans products. So risk, global warming, mix, North Face sales decline. Marketing campaigns for Vans. So deleveraging of balance sheets, stronger consumer so strong brand image of North Face, Supreme, Dickies, Cal. So catalyst for growth is going to be new Vans products, really new marketing campaigns, I guess leadership, question mark. So let's take a look at VFC quarterly transcripts. Wait. Okay, here we go. Alright, we'll be stepping down. More deeply, Q3A. This was last quarter operating without America's regional platform. So I'm not too sure what they mean by regional platform. So VFC Europe platform. I guess a entire unit just for the US. Okay, so in January, that's good. Maybe there's going to be some good earnings, strong earnings here. Strongly held back by operating model. Runs have certain features. 3 of them are clear brand product plan that one. So view Vans revitalization of Vans brand. So this really is clear brand purpose and marketing. We've Beat product plan and marketing to weave the two. As truly strong brands move through time, ownership evolves and almost becomes shared. Best brands learn to share and pay respect to their most important customers. I do think that maybe the TikTok about the Philadelphia Vans is probably gonna, maybe it did have some material impact on sales. Most influential walkers. Yeah, those who are the most influential. They're the ones who drive success and ownership and advocacy. In the period from 2015 to 2020, brand really took off, again energized and accepted by new groups thanks to cultural trend makers. Consider online up to lower price points and value stores offer more higher waves of the same old things. Poor move. Okay. But it will. Okay, this is funny. Alright, let's see. Vans. Shoes. So yeah, I think this is their new model, which is, yeah, I'm not a fan of this one. I do like their slip-ons a lot. I enjoy skateboarding in my free time, so the slip-ons are probably my favorite Vans shoes. And the skate highs are also really nice too. Okay. This checkerboard fund. Interesting. Okay. Let's take a look at the sale section. What do they have on sale? Sport low. So some clothes, seems like. Oh man, alright. I feel like I'm getting a little bit sick here. I have to close my window, and it's probably time for me to go shower and clean myself off. So I'll do that and then come back. I might do that, go eat, and then come back and stream until honestly the rest of the day. So I'll be back in a sec. Maybe 30 minutes to an hour. So see you guys for now. Bye.